It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast as we talk your real estate news. Property, 7 days a week, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. Well, it's a Tuesday morning, August the 6th today, and coming up on Saturday, we're going to be talking once again about living in a tiny home, cutting back on how much you spend on a property. And Louise, she's going to be here to break down her journey, which does have a little bit of a Scandinavian influence. And she was even able to pull out the power tools and with a friend of hers, get the thing built, which is no mean feat. And tiny living at the moment, I think fair to say, it is a movement. It's a way of life for so many Australians. And we will dive into Louise's story and find that all out on Saturday as part of this coming weekend of podcasts. It is very nice to have a smaller footprint, but in reality, it's not an option for a lot of people starting out. And there is real mortgage stress going on out there in local communities at the moment. People hanging on just. And there is a company in Australia that is across mortgage stress who kind of track this type of thing. And we're going to catch up this morning with Barrett Hasseldine. He is the head of modelling at Illion. And Barrett, welcome to the Real Estate Breakfast. Good to have you on.
Good morning, Craig. Thanks for having me.
So tell us a little bit about what you do there in terms of tracking the numbers and doing the modelling.
Absolutely. So Illion is one of the main credit bureaus in Australia. So we hold information that's shared with us from all the major lenders across the country. So we can see each month how well people are managing to stay on top of their repayments on their credit cards, home loans, personal loans, etc. And so certainly over this past period, we've been tracking closely how well Aussies are managing to stay on top of their mortgage repayments. And you're exactly right. We have seen quite a worsening in repayment stress. So typically over the past little while, we've seen, most households have been managing to stay on top of their mortgage repayments. Over the past year and a half, since the effect of all the RBA rate rises has really kicked in, we've seen that nearly 50% higher number of people being behind on their mortgages than what we saw back at the end of 2022. So there's definitely a large number of households which are really needing to make some tough decisions in terms of household expenses and how they can manage to be able to make their mortgage payments on time.
Yes, of course, we do have the RBA decision today, so it was very good timing to get you on, and we'll be able to bring you that decision later on this afternoon. Anthony Landau is going to be here, so let's hope that based on the CPI numbers that the RBA decide just to keep us in pause mode. And just on that, Barrett, I know that you guys have done some estimations in terms of additional rate rises that could increase the delinquency rate, and that would affect about 2,000 borrowers on your modelling. So I guess you've got a very active interest in what is likely to happen this afternoon, one way or the other.
Absolutely. So we've had obviously some really material changes to the cash rate of late, as well as to home loan delinquencies. So my team has been able to run the numbers to see how those two relate to one another. And it's through that analysis that we've been able to say that, as you say, for every 25 basis point increase, we're likely to see around about another 2,000 home borrowers starting to fall behind on their mortgage repayments. So it is obviously quite worrying for those households that are already living pretty close to the line in terms of their monthly cash flows. That could be the straw that breaks the camel's back for some of those households.
And let's just talk about the stress among recent borrowers, particularly showing up in Sydney and Melbourne, where people and their cash buffers, I mean, they're either getting quite low or in many cases, unfortunately, they're fully depleted.
That's exactly right. So what we've seen when looking at how households are going around Australia and staying on top of their mortgages, you're spot on that we've seen higher levels of credit stress in Victoria and New South Wales. So those are the two regions where we've seen the worst deterioration in mortgage repayments. Some of the other states, maybe ACT and Tasmania, showing less stress, which is awesome to see over there. When we look deeper into the numbers of what's going on with these households that are falling behind on their payments, disproportionately, they are people who have more recently taken out a home loan, whether that be a new housing estate or whether it's an inner city apartment. Often those individuals, those homes, those families have borrowed to their capacity during COVID when interest rates were lower. And often with the interest rates now higher, they might not have the financial means to be able to keep those household budget balanced each month. And so at Illion, we also keep an eye on how individuals are spending money. And we've definitely seen some material changes in terms of how households are changing their spending. So less on going out for entertainment purposes, more for staying in and watching Netflix, less for going out to restaurants and more staying home and ordering takeaway. There's lots of little changes happening, as well as more material ones, such as a reduction in insurance cover that people generally have, which are, I guess, everyone's efforts to just try and make the budget balance a little bit better each month.
All right, we are talking with Barrett and looking at the numbers and the modelling, and we'll come back after this and talk a little bit more about what's happening around that space.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
And right now it is time for another 30-second property tip. We are going to Rob Dorey there on the Gold Coast. And good morning, Rob. What have you got for us this morning?
Yeah, morning, Craig. Look, conducting so many auctions, obviously meet many buyers who are a little scared, and quite often it's the very first time that they're bidding at auction, and they can be given lots of advice from maybe people that don't necessarily give the best advice. So look, today I'd like to give some advice around bidding at auction, and quite simply, the best advice I can give you is if you want to buy a property at auction, then act with confidence. Know what number you'd like to pay for the property. Get to that number before anyone else. As an auctioneer, we don't expect you to pay any more than you can afford, but don't sit back and do nothing. You don't scare your competitors by sitting on your hands and doing nothing. 68% of the time, opening bidder wins at auction. It's to do with confidence. And secondly, when someone else bids, make sure you bid really quickly. The more you do that, they'll think you've got more money than them, and eventually they may just give up because of it. So get in, bid strong, bid high, best chance to win at auction.
Yeah, be confident like a auctioneer, perhaps.
That's right. And you don't have to be confident as long as you look confident.
That's right. Fake it until you make it, or in this case, fake it until you buy the property. Good on you, Rob.
Cheers, Craig. I've been doing that for 30 years, by the way.
Don't navigate the real estate market alone. Let us help guide you in the world of real estate every day. Make better informed decisions with the latest news and insights.
And it is a Real Estate Tuesday. We are talking with Barrett in terms of some of the modelling around delinquencies, etc. And Barrett, you were talking about the fact that most borrowers manage their repayments. The rise in delinquency does signal increased credit stress. You did say that households are cutting back on discretionary spends, especially essential spending, including insurance. So we've actually been talking about that over the last couple of weeks, even to the point where a large cohort of people have just decided not to pay their insurances. Is that something that is sort of showing up as you track all of those spends out of the household budget?
Absolutely. Essentially, once the interest rates had all kicked in, the largest ones had all kicked in, which was at the end of 2022, it was pretty much exactly then that we started to see a reduction in household spend on insurance. And that covers health insurance, automotive insurance, as well as home and contents. All three of them we saw start to decrease. And so we do feel that there is a bit of a direct effect of what's caused that paring back. It's a double-edged sword with reducing insurance. One, it might help in the short-term cash flows for that household. But if something goes wrong, there's a car crash, a health incident, an accident at home, it does leave those households a little bit less resilient to be able to get through those shocks to the system, which in turn can actually exacerbate late credit repayments, etc. So it is a bit of a worrying sign to see that cutback happening.
Yeah, I mean, you've only got to look at the situation of somebody having to go into a mortgagee sale. The house sells, but it doesn't sell for the same price, so whoever bought that property loses. And then in that same week, if that person is driving around with an uninsured vehicle, hits a European car, does $100,000 worth of damage, this can wipe people out completely for 10, 15 years. Some people just never recover from this sort of stuff.
It's definitely some challenging times, and many of the insurance premiums have gone up significantly, especially in certain flood-affected areas, etc., for home and contents insurance. So it makes sense that households are needing to make some of these really tough decisions.
Yeah, and it always surprises me about the number of people who don't communicate with their banks about what is actually happening within their accounts. The banks can see it, of course. The banks know this is an unusual cycle that we are in. It's not in the interest of the bank to see you in default mode, which is why you should be talking to your bank openly and honestly. Yet some people just leave that way too late, of course, until we have reached falling off the cliff. It's a really sad sort of part of this cycle, this property cycle, where people just are not articulating their problems within their real estate situation.
I feel like you're right there. We definitely see really good outcomes can happen when a person proactively works with their bank to have a conversation with them around what their situation is, whether it be job loss or the like. And banks need to work with individuals. As you said, they don't want to see them struggle to make their payments. Everyone wants a good outcome. I feel like there is some real challenge in, I guess, admitting to a bank to say, look, you know what, I'm actually struggling at the moment. But the banks have those conversations every day of the year. It's something that they're well trained to do, and definitely can create a good outcome by working more closely with your lender.
Yeah, don't be backwards and coming forward. Just go to them and see what they can do for you. All right, it's an interesting day today, Barrett, because, as I said, later on this afternoon, we're going to find out just what the RBA has in store for mortgage holders. Hey, thanks for telling us a little bit about what Illion does and some of your modelling there. We'll get you back on at a later date, and thanks for coming on to the Real Estate Breakfast this morning. I really appreciate it.
My pleasure, Craig. Thanks so much for having me on.
We are more than just a real estate podcast. We cover a multitude of subjects, including property data, current buyer-seller sentiment, and the mood of the market. Follow each week all of the main talking points and know your property.
Scandinavian countries have a whole lot of cooperative housing, which is a really interesting model. And you can have a rental cooperative. You can actually buy shares in the housing instead of having to own it outright. So it gives you a stake and it gives you the right to occupy.
The mum said that she felt guilty, maybe because she's living in this large home by herself. And in the end, she just said, no, hang on. I've got to make this available to my son and partner and friends.
I think a lot of parents feel that guilt because they had it better in their day and they didn't have to deal with this kind of struggle. So, yeah, I guess she was just trying to work out what she could do. And luckily she was in a position. And I should say she sort of talked about the benefits too, like it was a bit of a sacrifice. She's moving into a smaller house, but it wasn't without its benefits.
We connect you to the best real estate information across Australia. The Real Estate Podcast.